Welcome back, traders. I have three super important things that I want to cover with you today. First, I want to give you my bear case for the market. Second, I want to go over my incredibly profitable trades that I put on last week, and I alerted you to for free here on YouTube. Did you follow any of them? And number three, I want to talk about new potential setups coming up for this week. We'll have to see what is pulling through. So first, let's go through my bear case for the market. And honestly, that is my base case right now. The bear case is looking more and more and more like this is going to be exactly what's going on. But we have to see, right? We can't make predictions. We can only see what the data is giving us. So first, we have a sell signal on the SPY in Outlier. So let's jump into Outlier real quick and let's take a look at that. So first, we're looking at the S&P 500 got a sell signal here on June 16th. Now, a sell signal doesn't necessarily mean that things are going to crash, but it does mean that risk is elevated right now. You probably understand that risk is elevated right now. And Outlier is trying to tell you that now is the time to be risk off rather than risk on. Next, the bearish market breadth is what we see inside of Outlier. So real quick, what does that mean, bearish market breadth? So on our watch list, what we are measuring is how many stocks are getting buy signals versus how many stocks are getting sell signals. You can see the data came through on Friday with 151 new sell signals and 127 new buy signals. So if we look on the market breadth, we can actually see we had a bearish breadth crossover on June 12th, and it's been going down ever since then. Actually, it went from June 12th was bullish, and then June 13th was bearish. So at that point, that's when Chris does not put on any new trades. That's when Chris says, I think I'm going to hold on to the trades that I've got if I have any on, and I want to show you those that I had put on. So with this moving down, that is something that gives me a lot of concern. So we have a sell signal on the SPY, and then we have bearish market breadth. More and more sell signals, less and less buy signals. But I'm not done yet, right? Next, we have bearish sector breadth. Now, bearish sector breadth is super important because the way that I look at trading is that 40% of the move is due to the market itself. 30% of the move is due to the sector, and the last 30% is due to the stock itself. So you need to have the market, the sector, and the stock all moving in the direction that you want to see. So let's take a look at the sectors here. All but one sector. So there's 11 different sectors in the market, if you didn't know, and all but one are bearish except for energy. Now, energy is weakening, but it is still bullish. However, all the 10 other sectors are bearish. So if you're putting on trades and you're struggling and you're like, why does this keep happening? You've got a sell signal on the SPY. You've got bearish breadth on the whole market. And then depending on the sector that you're in, you might have bearish breadth on that sector. That's why you've been struggling this week, right? We are trying to alert you to these things ahead of time so that you don't have to continue to struggle, right? You can save time, make money, and start winning with less risk. Now, another thing that's really bothering me is this Iran bombing, right? The uncertainty around the Iran bombing is super important, right? Political issues aside, the market doesn't like uncertainty, and bombing other countries, regardless of your political stance, causes uncertainty. We can all agree to that. The market doesn't like uncertainty. This just added a big sprinkling over the top of everybody. What does this mean? Where are we going? What is going to happen? And nobody knows. Next, potentially bearish market trend starting. This gives me a little bit of concern as well, because one thing that I use as a get out of everything signal is if the SPY, the S&P 500 ETF, if this closes under the 20-period exponential moving average, so the 20-period EMA, if it closes under here, which is right around 593.70, I close everything. I get out of the way, because anytime there's a close under the 20 EMA, that could lead to a lot more downside very, very quickly. Now, it also could bounce right back up, right? Like we've seen time and time again, this market can be very resilient, but anytime you see a close under the 20 EMA, in fact, let's go to the last time we saw some closes under the 20 EMA. Here was one, and then that was in February. And then the next time it closed under the 20 EMA was here, late February, and then it went down hard and fast. So that is one of my big rules. If you see the market close under the 20 EMA, get out of everything. But if it closes back over the 10, so a close under the 20 means get out of everything. A close over the 10 means risk is back on. However, another close under the 20th here, not the 20th, but the 20 EMA, that is a get out of everything signal. And then you can see what happens right? You can see what happens. Now, the way that I measure a trend is having the 10 over the 20 and price over the 50 EMAs. We still have that still, right? The 10 still over the 20, price is still over the 50. I close under the 20, get out of everything. You got the 10 under the 20 and price under the 50, which has not happened yet. But I don't know how fast that could happen, right? Anything can happen in the market. You need to be always thinking risk first. If the 10 goes under the 20, price goes under the 50, that is a bearish trend. So just keep that in mind over the next coming weeks or so. Now, I want to shift and talk about my trades that I put on last week that I alerted you to, right? My account is up over 56% this year in only 15 trades, right? I'm not making this up. Every single one of these trades I have been talking about here on YouTube. I'm up 56% so far this year. Most of the year I have been in cash. I have only put on 15 trades, right? Put on some in May, and I put on some in June, and I put on a little bit more, and that is it. That is it. Right. This is how trading is supposed to be. When things are volatile, look at the market's the blue line, okay? It's volatile to sideways, and then it went down, and then it's been sideways since then. The market is up 1.4%, yet my account is up 56% so far this year in only 15 trades. Now, every one of these trades has been on YouTube for free. Every single one of these trades I have put on YouTube for free. You can even go onto my channel and go to the 2025 trades, and you can watch every single one of these trades opening and closing, right? This is how transparent I have been. I cannot be any more transparent. I'm giving you everything. But are you going to be one of the 50% who listen passively and not do anything? One of the 25% who misconstrue my words, go out and lose money and then say, it's all Chris's fault. Chris is making all this money over here, but he's teaching me all these things and I'm losing money, right? There's still 25% of people who leave comments saying how stupid I am, how I don't know what I'm talking about, how I don't take enough trades, blah, 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 blah. And then there's the 25% of you who are watching who are actually making money and changing all of your future generations. And you're doing it for free here on YouTube. So if that's not a good enough reason to subscribe, I don't know what to tell you. Right? Go ahead and subscribe if you haven't already. Now, who am I? Real quick, my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So let's go over those 3 trades I told you about, and I told you about them exactly everything I did. I put these on Friday the 13th. Friday the 13th, I put these trades on. How about that? So let's go take a look at each one of these and see how we can learn from them. And hopefully you can do the same thing in the future. So first one is, let's start with MP. Now, MP was a huge one. MP was giant. So this one here, I got on it on Friday the 13th. And then on Monday the 16th, right at the literally next trading day, it was up 15%. Now, this was a huge move, but the market and the sector breadth both nosedive. We talked about that earlier, right? On the market breadth, how it nosedived right here. And the sector breadth, this is the material sector, did the same thing. My rule is if the sector and the market both go down and have a bearish crossover in breadth, I get out of my trade. So that's exactly what happened on MP. Let's go over to MP real quick. So here's that buy signal. As you can see, it's continued to go up, right? It's continuing to get more and more greedy. However, the sector, which is what we see down here, is getting less breadth. So more fear, not fear. What am I trying to say? Worse breadth. That's what I'm going for. Bearish breadth down here. And then the fear and greed average for every stock in that sector actually has been going down as well. So that was an exit signal for me on MP. My options went up literally 100% to the penny from here to here, while the stock was up 14.77%. A giant move in one single day. Huge move. Let's go to the next trade. It was PBF. Now this one, what I wanted to show you here is even though I got out of MP, and that's fine, right? I followed my plan. I got in, I got out. It's continued to run up. It's going to do what it's going to do. I don't care. I got in and I got out. I got in, I got out, and I got some profits on the way. You can see right here, it actually ran up into this order block and got rejected. Now, this is really important because I want to showcase on PBF one of my trading rules. which is if it runs up into the order block, I then switch to a 5-minute intraday chart. So I was actually driving to our lake house last week. So last week, I did all this, made tons of money from my lake house while my younger son, Elliot, and I were literally hanging out, doing whatever we wanted to do all week long. And I mean, I made gobs and gobs of money. I hope you did the same as well. But you can see this order block here was right in our way. Now, my rule is if I have at least 2% room between where the stock closed and the bottom of that order block, that's enough room for me to trade this. And you can see, actually, let's measure that out real quick. That was about 3% move from the bottom of this candle where I got in to the bottom of this order block. Now, let me remove this one here. And what happened next was it went up 7.87% the following day. That's awesome. Not as much as MP, but it still went up huge, right up into this order block. Now, when this happens, I switch to a intraday plan with a 5-minute chart. Let me find that for you real quick. And where is that slide? Here it is. So I switched to a 5-minute chart. Now I'm actually driving down the road. I am in my Tesla, and I got my phone propped up on the little phone charger holder, wireless charger thing down at the front. And I got the chart pulled up, and I don't have to do anything, right? My car's driving me. I got my headphones in, listening to an audiobook. In fact, I was actually listening to Dave Ramsey's Total Money Makeover because I had seen Dave Ramsey's doing great, as you probably heard of Dave Ramsey, and I'm trying to replicate that for the Outlier channels. So I'm listening to Dave Ramsey, trying to take notes on what he's doing and how we can replicate that here, just full disclosure. And I'm looking down and I'm watching the chart just tick by on my phone. I don't do anything. I literally watched it all day long as we're driving down the road to the lake house, and it's doing exactly this. It ran up into the order block, but never once did the 5-minute and 10-minute, I'm sorry, the 5-minute 10 EMA cross under the 5-minute 20 EMA. This is really important, right? So it ran all day long, no issues whatsoever. And then by the end of the day, it actually crossed back down right around the time I'd be trading anyway, but it did not close on top of the order block. Had it closed on top of this order block up here, I would have kept it. It did not. So I closed it right here. So a super move, 7.87% on the stock. My options went up 34% during that time. I didn't lift a finger. It was so easy. I love when trading goes like this. I always tell people all the time, trading is meant to feel effortless. If you are struggling, if you are getting excited, if you're getting scared, if you're getting nervous, if you're losing sleep, you're not doing it correctly. Trading is meant to be effortless. When you're doing it right, it feels that easy. So then it smashed up through here. And like I say, I watched that all day long and got out. Whereas MP, I didn't watch this one because I was already out. I didn't care. But this is exactly what can happen. Run up into an order block and get rejected. PBF ran up into this order block all day long, did not get rejected, and Chris got paid bigly. Last one, and I'm still holding RRC. Take that as you may. I am still holding RRC. RRC is in the energy sector. The energy sector I mentioned a minute ago has not had a bearish breadth crossover yet. So I am still in RRC. RRC has gone up. Actually, let me re-measure this. RRC has gone up 4.72%. My options are up over 36% so far, I believe. Actually, I forgot to update my notes on here. Yeah, that was the notes from the last one. 36% plus on the options. I don't remember exactly. The stock is up 4.72%. And that is just that easy, right? Putting it on and letting it run. I did roll the option. Rolling it means moving it up to a higher strike that allows us to take partial profits now, free up capital, and keep the trade alive. So I have even less risk than I did when I put it on, yet I have more money in my account than I did. Now, this is continuing to run. I don't know when I'm going to get out. I have a plan to follow my exit rules, but I don't know the date when that's going to happen. So those were the 3 trades that I put on last week. Huge, huge, huge winners in all 3. And that is by design. That is by design, right? Cut your winners short. I'm sorry. That's the wrong thing to do. Cut your losers short and let your winners run out of control. So I talked about Outlier. Let me tell you what it is real quick. What is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful owners are greedy and greedy owners are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And I just showed you 3 Outlier moves just like that. When the market has been moving down, has been moving sideways for the whole year, I'm up 56% by following these Outlier moves. Are you? Now, if you're ready to save time, make money, start winning with less risk, it takes just 3 easy steps. Number 1, head on over to outlier.com, grab the annual pass for just 82 cents a day. If you're on the monthly plan, you can upgrade with 1 click and save 64% off the regular monthly price. Step 2 is start using the Outlier 9 framework. This is exactly what I've done on every trade this year, and you can follow all of those on YouTube for free. And I'll show you exactly which trades that I'm putting on that have this Outlier 9 set up. So that's step 2, use the Outlier 9, the 9 itty bitty baby steps for the slingshot setup. And then lastly, sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. So let's go take a look right now to see what setups we can find. Now, for sure, none of them are going to fit the Outlier 9, but the 2 sectors that I want to look at specifically are the defense sector, right? The defense, aerospace and defense, probably have a good idea why. And the energy sector. Again, you probably have a good idea why, but we're going to be using the Outlier 9 framework right here to evaluate if any of these are worth our time, worth our money, and worth our risk. But I'm telling you right now, not any of them are going to light up all 9, not any of them. So let's take a look. And what I did was I ran 2 different screeners. The first one that I ran, that's funny, I ran, first I ran that, let's go over here. I ran the industrials, and then I went specifically into the aerospace and defense industry. So there were just a handful that pulled through. Let me move my fat head out of the way here. We've got Rocket Lab, Embraer, Textron, Kratos, and RTX. I actually used to work at RTX, so I want to look at this one real quick. RTX used to be called Raytheon. I used to work in the Space and Airborne Systems division of Raytheon, and I worked in corporate finance at Raytheon, and I worked in specifically my programs that I worked on were the missile targeting systems for the Predator and Reaper drones, MTS-A and MTS-B, and I just found that absolutely fascinating. I hated the bureaucracy of working at that company. One thing I absolutely loathed more than anything was like every quarter they had layoffs, and they would do round robin. Okay, this quarter it's engineering, this quarter it's software developers, right? This quarter it's finance. And it's like, why are we doing layoffs every quarter? I hated that. But the project was cool. I ended up leaving that to work on other endeavors, but it was still a neat thing to work on. We got a buy signal way back here on May 1st. So let's go through our Outlier 9 to see if this is set up for the slingshot. I can tell you right now it's not, but let's see what we can do. Right, the market has a sell signal, so we're going to leave this on red. Leave this one on red. The market still has that bullish trend, right? 10 over 20, price over 50. We don't have the bearish trend yet, so I still need to mark this green. And then breadth on the market is not good. The breadth is not good. So we're going to leave this on red. So of the market, only the trend is green. Next, let's go to this sector. Let's look at this sector, and we can do that right here on the same screen. The breadth in the industrial sector is moving down. The fear and greed in the industrial sector is moving more towards fear, less towards greed. So this is actually both going to be red down here. Now let's look at the stock itself. We have a buy signal with a bullish trend. Your 10 over 20, price over 50. And as you can see, it's getting way more greedy, way more greedy. The further it gets on greed, the more likely it is to snap back. The further it gets in fear, the more likely it is to snap back. So even though right now feels like Raytheon is the buy of the century, the sector is moving down, but the one stock on its own seems to be strong. So the trend is good, the signal is good, and the fear and greed is good. Now let's go look and see if there's any order blocks on top of RTX. No, not on top of it, for sure not. So what this means is that this is a neutral reading to me, right? We have 1, 2, 3, 4, 5, 5 out of 9. So this is going to put it right in the neutral camp for me. Now, take that as you may. This stock could outperform and be amazing, but for me, I'm not interested in trading this one. I want to see all Outlier 9 lit up. So let's move from the aerospace and defense and let's go over to the energy sector. Now, like I say, I am still holding RRC. Even though I'm not adding any new trades right now, I haven't received an exit point on RRC. So let's go look at one of these in the industrial sector. Let's go to, how about Marathon Petroleum? How about Marathon Petroleum? Right. The reason I picked Marathon Petroleum was I looked right over here and it said the Outlier signal return was 486.38%. That's not too shabby. What was RTX? What was Raytheon's? It was only 111.24%. So following the outlier buy and sell signals gave 486.38% on Marathon Petroleum. So let's go look on Marathon Petroleum. So energy sector has not crossed under yet. So we're going to make this breadth here still bullish. And then fear and greed in the energy sector continues to grow. So that actually looks really good as well. And then let's go look at the stock itself. Let's light these all red before we do anything so we can check. Buy signal, 10 over 20, price over 50. With that green overlay gives us a bullish trend. And then you can see here it's getting more and more greedy. So the trend is strong, the signal is buy, and the greed is rising. And then let's go over to MPC. And there's no order blocks. Oh, well, there is one up here. How much room do we have? My limit is 2% or more. This is 5.87%. So I would still make that green. So as you can see, how long did that take us, right? Maybe 30 seconds on RTX, maybe 30 seconds on MPC, on Marathon Petroleum, right? This is how easy it is whenever you're using Outlier to know if a stock is set up or not, right? RTX was a neutral. This is a weak buy. A weak buy, it has 1, 2, 3, 4, 5, 6, 7 out of 9 puts it in weak buy category here. So let's take a step back here. What do we see? The aerospace and defense industry might have some legs here, but we don't have the data to confirm that just yet. There's a lot going on out in the market. So my personal opinion is that I think we're going to see some pullbacks. I think the market might get a lot harder to trade if it hasn't already been hard for you already. But the number one thing you need to do in all stances of the market is trade risk first. Remember, one thing I always say is that all stocks are bad. Every once in a while, they act right. And if you're in a stock that's not acting right, you're not in the right stock. It means you need to be getting out. So if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos, and I'll see you soon.